is a digital blitzkrieg in the E&M sector, both globally and in India. Clearly, technology has taken center stage as we see its far-reaching impact on almost every segment within the sector. This is the key finding of PwC's Global Entertainment and Media Outlook, which is in its 17th edition and covers the period 2016 to 2020. The global entertainment and media market size is expected to grow from $1.7 trillion at the end of 2015 to $2.1 trillion by the end of 2020 at a CAGR of 4.4%. The CAGR projection has been derived after analyzing data across 54 countries. In fact, for majority of the countries, 36 of them, E&M spending is growing far more rapidly than their GDP. India is one of them. So how fast is India's E&M sector growing? PwC's Global Entertainment and Media Outlook this year projects the Indian E&M sector to exceed $40 billion by 2020, growing at a CAGR of 10.3% through the period 2016 to 2020. In terms of absolute value, we are not in the top 10 markets yet, but countries like South Korea, Italy, Brazil still ahead of us. However, we expect India to be in the top 10 bracket by the end of the outlook period. The segments that will drive India into the top bracket would be internet, TV, publishing, and cinema. Declining pricing power, disinflation, and trend towards free market and free sharing is fundamentally making it difficult for players to grow as aggressively as they have grown in the recent past. Each year, in putting together the global E&M outlook, PwC collects and aggregates an immense amount of data and gains insights into the sector. This process enables us to pinpoint the major shifts, and this year we have identified 5 key shifts that promise a host of opportunities across the sector. In terms of demographics, the youth will propel the E&M growth all the way into 2020 and beyond. We have seen the speed at which younger consumers adopt new consumption behavior and have significant ability to multitask on different media. This very attribute will allow them to set trends and drive consumption. It is our estimate that the 10 youngest markets will grow at least 3 times faster than the 10 oldest markets. Comparative wealth is no longer the influencer. It's a tug of war between traditional and digital media. However, content still rules the roost. Whereas much of the E&M industry is growing global, cultures and taste preferences in content still remain steadfastly local. The ability to design and curate one's own media diet has been one of the most powerful trends to emerge in the industry. Consumers want to control what they view. However, aggregators who can aggregate varied content would still be attractive to consumers. Each market will present different opportunities for growth. What works in one market may not necessarily work in the other. Players will need to identify such growth opportunities and keep an eye out on how potential regulations will either restrict or enhance such opportunities. Businesses will morph to shed their traditional identities and move towards states which help them integrate various capabilities and offerings that create value for consumers. The big question that all players will be asking themselves is, we are a media company, now what? A healthy overall GDP growth rate, young population, steady rise in discretionary spend by consumers, and slower than expected growth in digital-friendly ecosystem means that India will still grow faster in the traditional media space far more robustly than most of the markets. Be it in cinema, TV, out of home, or publishing, India will continue to grow at a significant pace. The migration to the digital landscape is still nascent for India. Though it will need to chart its own path, it will get the benefit of experiences from other mature digital markets in developing its own strategies and plays of how to monetize the digital space efficiently and effectively. Digital consumption is the future, and India will need to get future ready to meet the challenges and reap the opportunities.